everyone. It's time for another daily video. We're coming up on just after 7 o'clock here Eastern Time on October 30th. As you can see, the market has managed to crawl its way up to 680. This is formally the 30-year high. Let's go up to a daily bar so we can see what we're talking about here. So we're at a resistance level. Again, we've got to be careful. There's not a lot of momentum in the market here. Let me delete some of these lines. There's not a lot of momentum. Unlike the last time it came up, the market had a bit more conviction, meaning it was coming off of a level at about 300 right here before the last move up. So it came up off of a base without a whole lot of retracements and was arrowing for the all-time highs, but this time managed to consolidate for 3 weeks prior to the break. So momentum, at least at the beginning stages here, is non-existent. However, let's turn that around and see that the market was unable to sell off for 3 weeks either. So we have what's called a base at high levels, is what some traders will call this. And this can be the beginnings of a very, very long move. So once again, we're going to need to keep our powder dry, watching for the market to break out, forming flags or possibly pennant patterns back into this support area here. Also, though, we need to be watchful for the market to reverse. I was talking about this in the Q&A video today. Volume did drop off as the market started to move up. As I zoom out here, you can see that from this high point here at the low, volume overall, you can see, is moving down. Okay, even the moving average it started to level off, but then you can see, let me use a line here, use blue. You can see just by connecting the 2 points, the moving average is also giving us the point down. That's generally speaking not a good thing when the market is coming into resistance. But the reason why I'm flip-flopping here is simply because the market is so high. And we have to remember that there's nothing that attracts a buyer like a market moving up. So let's keep our powder dry here, watch for a pattern to form. There's a bit of triangle starting to form here, but anyway you slice it, it's sloppy. So again, this is not something that I would want to put on an autopilot trade. You're definitely going to have to watch this one as we start to form up where the market's going to go. So if you're looking for trades coming out of this pennant or flag, pennant or triangle, whichever way you're looking at it, this would be long trades above 206.92, 206.92, using a 37 pip stop. Short trades would have to come in underneath this spike here, even though the market line here is quite a bit higher. You can see this again. It's just really whipsaw time here. So don't get lazy and think you can ignore that kind of stuff. Really, looking to short is going to be right here about 656, so 2.0.